Hello and welcome to the Gulf Coast Real Estate Insider. I'm Brent Ellis, joined by my mother Sandy Ellis, and we've got a wonderful show for you today. I guess we do, don't we?
Well, yeah, I hope so.
I hope you're going to carry this thing. So anyway, we thought we'd talk to you today about our 2026 outlook, kind of where we've been in 25, some of the signals. We just wrote an article. It's going to be in the news press this weekend. It's out on our blog right now. If you want to read the whole thing, just go to blog.topagent.com. But Sandy, our outlook for 2026, what are you seeing on a day-to-day basis right now?
Well, we're seeing lots of changes from 2025. Interest rates came down, and over the past few years, insurance rates, all kinds of things have happened to change, I think, our market and our market conditions. So I think we're starting to see more people active in the real estate, selling and buying.
People don't realize in 2025, we think when the official numbers come out, it's going to be about the fourth most active market in the history of Southwest Florida. So that's saying something. A lot of agents out there aren't selling much. They're saying it's dead, it's this. But when you've got the fourth most active market for closed sales in the history of Southwest Florida, that's not a dead market.
No, it's not a dead market. And in fact, it's been picking up, and it's picking up even more.
Now, what it was a shifted market from back in 2021, and a lot of agents didn't have experience working in a shifted market. What's a shifted market? A shifted market is when a market shifts dramatically, or even a little bit in a short period of time. So, we saw the run-up in prices with COVID and all of that, and then we saw it come down for about 2-3 years, and a lot of agents, probably 85% of the agents weren't in the business before that run up, so they don't know how to handle. Buyers are different. Like buyers right now.
That's true.
Buyers right now are lowballing homes, and they probably shouldn't be because they're going to miss out on some of the best deals.
And some of them are missing out on the best deals. Yeah, but someone else is coming in and taking it, and they're setting up another buyer.
But why do buyers lowball?
Yeah, well, because some of it is some of the things they've heard, and sometimes they're hearing it even from realtors, some of which are actually misinformed about what's happening in the marketplace.
Realtors who don't have a lot of experience, haven't been through the shifts. I think, to sum it up, it's fear. They're afraid of overpaying based on the information that they have. They don't have all the information. All they have is the herd mentality that things have been coming down, which is true. For the last 3 years, prices have been coming down. But we've been through this so many times, there comes a point when it starts to level off and then go back up. But a lot of buyers will miss that because all they live in is what's happened the last 3 years. It's for the same reason they bought at the top of the market, because it went up dramatically for 2 years. So now's a good time to buy when that may have, in hindsight, been the worst time to buy.
So, I was looking at a report last night, and I think I even mentioned it to you. Over the past few years, we have seen some reporting that showed that perhaps a house sold in July, and if it were to sell today and it was November, it might sell for less than it sold for in July. Last night, I'm looking at reports, and I'm seeing in this particular Cape Coral neighborhood that houses are actually, that they're showing that it sold in July, and if it were to sell again today, it would sell for a higher number. And I found that to be very interesting.
Well, that's the way these market shifts go.
Right.
It doesn't all work in tandem. You'll start to see certain neighborhoods turn faster than other neighborhoods, and it's all absorption rates, inventory levels, and whatnot. So I don't know if that's true or not in that particular Cape Coral neighborhood, but what I do know is it will happen either now or someday. And one of the interesting things about Cape Coral is it used to, a few years ago, have some of the highest monthly supply, other than Fort Myers Beach, in Lee County. And now we're not seeing that.
So today,
Cape Coral has a less month supply of homes than the overall county does. So I'm not surprised if that is true. I'm not surprised that there couldn't be neighborhoods in Cape Coral where it is true, because they are now below. I think they were at I think the county was at, I don't have it in front of me. Cape Coral's at 6.1, or the county's at 6.1, and the Cape Coral's just below.
I think
Once you start
was
getting
like 6.1 and the county was 6.5
6.9
or something like that. Yeah.
Once you start getting, but experts disagree, but somewhere between 5.5 and 6 months, that is the neutral market. You start getting over 6 months, it's a buyer's market. Under 6, they say, is a seller's market. Cape Coral is right there. So it could be that prices in certain neighborhoods.
In this particular area, beautiful waterfront community, intersecting canals and so forth. I went there this morning and it was an exceptional property. I guess what I'm saying though is that because I was seeing that in that particular report, and that's not how we do a CMA, right? I mean, we use several different resources and several different ways of looking at what the values are. But it was another reason to take another look at all the other reporting.
Well, let's look at the Ellis Team Current Market Index. It accurately predicts the forward direction of pricing in the market. It is down right now to 5.8. It was 7.04 a while back. So we are seeing significant improvement in the current market index. 5.8 is still a little higher than I'd like to see, but that's commensurate with, if you're talking 6 to 7 month supply of homes, you're not going to get a 4 or a 3 or a 2 on that current market index. That's reserved for markets that are just busting loose and prices are definitely escalating, and you can see it. But now that we're down to a 5.8, if that continues to hold, you could see some stabilization and or an uptick in home prices in the county. And so the Ellis Team Market Index agrees with the report you saw yesterday from a bank reporting thing. And I just saw a report yesterday from the Florida Association of Realtors that talks about 2026. It basically mirrors the article I already wrote and already published on our blog. The next day, Florida Realtors came out, and I think they were saying the same thing. I didn't read the whole article. I just read the headline.
Yeah.
And it seemed like it agreed.
I think the stats that you pull up for us and present in the blog are just incredible, Brett. I mean, it really makes a difference. It gives, I know realtors across the county are reading your blog and following what you say.
Well, not all of them, not enough of them.
Not all of them. No,
now, the other thing that we're looking at is, let's just turn your phone off.
Okay.
Why would people call us when we're doing a podcast? You can just hit this button over here and it'll go away. There we go.
Particular seller
Don't people know we're shooting a podcast? I guess they don't know that. It's a very good thing that people call us, though, isn't it?
Oh, absolutely. Please
And
call.
our phones have been ringing the last few days,
Yeah.
so sometimes you feel like antsy, like I can't get anything done because I got all these customers calling. But the reason we do everything we do is so the customers will call us. So it's
And know that I'm not too antsy. I can take your call.
okay. She is a little more calm than I am. The other reason I think we may have a leveling out on prices here is affordability is up. So Sandy mentioned interest rates are down about 0.75% in 2025. They might go a little bit lower in 26. Who knows? Insurance costs have really come down. One, because of the insurance reforms, and two, because inflation's down. So they don't have to charge as much for the repairs when the repair costs aren't going to keep escalating. So there's that. So when you marry lower interest rates, lower prices, and lower insurance costs, that's a huge recipe for an increase in affordability. That's why we had our 4th best year in sales, and most agents who aren't selling don't get it. They don't know that.
And that's true. But some of the prices also did come down, okay? And as some of those prices were way too inflated, right? I mean, so I don't think the market dropped where it shouldn't have been. It's just that some of our prices had actually exceeded where maybe we should have been. Or people, realtors even gave indicators to sellers that they might get more for their properties than maybe the market could sustain at that time, right?
So are you blaming realtors?
Well, yes, all of us, because I think it's the way that we take a look, that we get the facts, we look at the facts, and then we make decisions about what they're telling us.
I think
if you hire the facts,
if you hire the wrong realtor, you're probably going to get the wrong advice, and it may cost you because while you're listed up here and the market's moving down, you get caught chasing that market down. But there are sometimes even the good realtors don't really know.
Have we chased the market down? Yes. I mean, we know those terms because we see how that's happened as well. We have
and we don't want to
sometimes
repeat
made
that.
the same mistake, but we don't want to repeat that exactly. Yeah.
And sometimes it's hard to know, but I think we have a lot of experience, so a lot of times we do know, and we can say, is that really what you want to do? But I'm hoping 2026 will be a leveling off in prices, and they'll eventually start going back up again one day. We don't want to see prices escalating 10 or 20% a year because that's not healthy.
The thing about it is, though, if you buy and sell in the same market, you're okay, right?
Yeah.
It's if you sell low and then wait a couple of years until the prices get much higher, then you lose, right?
And let's talk about the average appreciation rate. On average, the market appreciates about 4% a year. Now, let's say you're selling, or let's say you're buying right now and you're worried, hey, this may not be the bottom yet. It almost doesn't matter, because if you just wait a couple of years, that market goes down like this and starts to come back up. You're right where you started. But I would rather buy just before it bottoms out, because you've locked in that price. Once the market starts going up and everybody knows it, everybody jumps in and you lose that negotiating leverage with the sellers. So it's much more fun to buy in this market now at a great value, a great price, than it would be months down the road when interest rates are coming down, insurance comes down further, and there's less homes on the market. By the way, homes aren't increasing on the market. The inventory is not increasing like it was last year.
That's true.
So
Yeah.
now, when it really jumped was that next Tuesday in January. So I am going to be studying next Tuesday's
Tuesday,
numbers.
yeah.
And we could see a jump because a lot of people come here, they decide to put their home on the market, listings go up. But at what rate do they go up, and do the pendings offset it? That's what I'm going to really be watching next Tuesday.
Well, and the other thing is that people have been in the market for like 15, 20 years and they've sold one or two houses or whatever they've done. They can go back and look at what they paid for that house and what they sold it for, and they already know things. It's the first time home buyer. Sometimes they have to go back to see what their brother or sister did in the market or what their parents did.
That's a good point, because we've got a graph that can show you, and I think I did a video on this,
Did you? Yeah.
where if I went back in 2005 was one of those height of the markets back then.
Right.
And we asked everyone in 2015 or 2020, said, knowing what you know now, if you could buy every single property, if you had the money, go back in 2005 and buy every single property on the market you could, would you do it? And they all say, yes, I would, because they can see home values have gone up so much, even since 2005. And yet that was the height of the market at the time. So you say, well, I'm trying to time the market. I don't want to buy at the height, and I don't want to sell at the low. So I'm trying to time it. And you almost, you can't time it, because only the rearview mirror tells us when it bottomed and when it topped. But number two, you're still okay.
Have you ever seen anybody, any realtor, any appraiser, anybody time that market to where they get worth it exact bottom? I mean, I haven't, but have you?
It's just like the stock market. If you said, I'm going to time the stock market today, and I feel like the stock market peaked, so I'm going to sell all my investments, and then I'm going to buy them back when they do this, you'll be wrong about 99.9% of the time. And it's the same thing in real estate. Yeah. You aren't probably going to time it unless you get lucky, and number two, you don't have to time it right to do well. And that's the whole point of it. But I think 2026 is a year when buyers will look back and say, I should have bought everything I could, not because it was at the height of the market and it was still a good buy, because we're getting close to that low of the market. I mean, things are a lot more affordable now. And when interest rates start going lower, more buyers are going to jump in. Do you really think you want to be competing against a whole bunch more buyers once those rates come down?
Yeah, that's true. What about the new thing that Trump came up with this past week, however, where these large corporations are not going to be able to buy single-family homes? How do you think that's going to impact the market?
I saw a study, somebody did a quick study. It had to be quick because I just saw this proposal last night as a headline. It said it wouldn't move the market very much. But I tell you what, I kind of don't mind it, because, we get offers from these big BlackRock, and they're all funded by billions and billions of dollars. That first-time home buyer can't compete. And I've seen cases where I've had multiple offers, and first-time home buyers got beat out by these big-time investors. Now, it's not good for the seller, because the seller might have gotten $5,000 more from the big-time investor, but it will be better for the first-time home buyer, because they'll have a chance at home ownership. And what we know about society is this: when you get first-time home buyers, they start building their own equity. They care more about their property. They take care of it better. They save better. They're better parents. The kids do better in school. There's
Now,
more
isn't
stability.
that an amazing thing that the kids actually do better in school?
There's-
That it actually changes that whole family dynamic. That's amazing to me.
There's more stability. There's more
Yeah.
everything. So that's why I'm kind of in favor of it. It may cost sellers a % or 2 off the top.
Do you really think it will, though? Do you,
I don't know if it will, because some of these investors don't want to pay top dollar.
No, they
a few of
don't.
them did
Yeah, some
back
do.
in the height of the market, but most of them aren't now because they haven't found a way to make a lot of money like they wanted. And maybe, I don't know if this really goes into effect. You could have a slew of the BlackRocks buying all the property they can before it goes into effect. So if I'm a first-time home buyer, I'd probably try to buy right now where prices are low and you don't have a slew of them coming in. And then once it's cut off, and then you won't have to compete with that anymore. But I don't know how much lead time we're going to get. I'm just more interested in finding more about that.
yeah, I just saw that and I thought, I wonder what that will do.
That's our blink thoughts right now. We might have more thoughts in a month or so once we get time to think about it and digest it. But
We can come back to you with that when we have more.
I guess we don't really know.
We don't know.
And we don't know the details. So anyway, you've been watching the Gulf Coast Real Estate Insider Podcast presented by the Ellis Team at Keller Williams. If you got more questions, feel free to call us 239-489-4042. Our website, topagent.com. From there you can get to about anything. And blog.topagent.com. That's where you can read these articles. We publish them weekly. Got a lot of good stuff. Subscribe to that and you'll get that as well. Thanks for tuning in.
Matt Keller Williams is a family affair. Always call the Ellis Team, they'll handle you with care.